Good afternoon. I'm Paul Chase with Keller Williams, and it is my pleasure to introduce Dan Desmond from Barley Snyder and Barb Lease from Gift CPAs. We're going to be talking about incorporating for real estate agents. It's a really good thing, whether you're a solo practitioner or as part of a team or looking to build a team. We've all heard about that it needs to be done, but there's very little training out there on how to do it and how to do it well. So I went out and found the best people that I know on how to do this. So Dan, I guess you're up first.
Yeah, good afternoon, everybody, and thanks for joining us on the webinar today. I've had the pleasure, and Barb has as well, of presenting to some of your colleagues at Keller Williams before. We're really happy to be here with you in the virtual audience, and we encourage questions throughout the presentation. So if you have one that you'd like to raise, let Paul know by raising your hand through Zoom or however you want to do that, and he will help us moderate to get those answered. So I thought we'd just introduce ourselves to start out. My name is Dan Desmond. I'm a partner with Barley Snyder in the Lancaster office. And I've been with the firm since 2011. I practice mainly in three areas: business, finance, and municipal law. I do a lot of entity formations, a lot of general business work, which is what we're here to discuss today. And have worked with several real estate agents, some including your colleagues, to form entities and qualified associations in Pennsylvania. I'm a lifelong resident of Lancaster. I've lived here a long time. I live in Manheim Township with my wife and two kids. So Barb, I'll kick it off to you.
Thanks, Dan. So I just wanted to say thanks to Paul and Dan for putting this together and inviting Gift CPAs to help present this to everybody. So thank you for that. I am an accounting manager in the Lancaster office. I manage our Lancaster office. We have 5 offices: Mechanicsburg, Harrisburg, Myerstown, Ephrata, and then here in Lancaster. The services that we provide are, I would say, really as much as we can, the whole gamut of consulting for your business. So we are business consultants, from the formation of it to the up and running and how do we get going to now I need an exit strategy. So we're there sometimes in generational businesses as well. So that's really neat to see and fun to do. Tax returns, tax prep, we do that certainly. We provide financial statements, and in most cases, I would say whatever the client needs from an accounting perspective is what we provide. And I'll send it back to you, Dan.
Thanks, Barb. So we have an agenda today that's going to go over 3 main topics. I'm going to start out by discussing incorporating an entity in Pennsylvania and some of the legal benefits to doing that. I'm going to hand it over to Barb to talk about the tax benefits to incorporation, mainly revolving around electing S-Corp status. And then since you're all obviously real estate agents, the topic today includes how to register as a qualified association in Pennsylvania. So we'll go through the details of that. As I said before, I'd be happy to field any questions throughout if you let Paul know. We'll also open it up at the end to anyone else who didn't get heard before.
Hey, Dan.
Yeah.
Real quick, we've got some people from out of state. So where it's appropriate, could you sort of mention what applies nationally and what is specific to Pennsylvania, and if they need to talk to local counsel, just kind of keep that in the back of your mind, please.
Sure, yeah, and just real generally, most of the slides you'll see me refer to will be referring to Pennsylvania formation processes and qualified associations in Pennsylvania. As far as Barb's talk about tax benefits, those would be generally apply to a national audience in any state. And I can also point out that if you have an entity in another state, you can form that as a you can register that as a qualified association in Pennsylvania. So I think most of the national topics would apply on the tax side of things. But thanks for mentioning that, Paul, and I'll certainly try to highlight any other thoughts I have.
Great. Appreciate that. Thank you.
So the question becomes, you are a real estate agent and you're attending this presentation. Maybe you've thought about creating an entity in the past. Maybe you're ready to. Maybe you're just curious why you would go to the task of doing that. The way I like to think of it is that you are, as a real estate agent, you're likely already running your business as a separate entity, quote unquote, from your personal life in terms of, you might have a separate bank account for your business, and you might, but you might not be enjoying some of the legal or tax benefits that incorporating an entity would offer. So the main benefits to incorporating are, from a legal perspective, would be personal asset and liability protection. I'm just going to speak broadly about incorporating in general, and then I'll mention an important caveat for qualified associations in Pennsylvania. People form entities to operate their businesses for many reasons, but one of the most important ones is the personal asset and liability protection. And essentially what that means is that when you form an entity for your business and you operate under that entity's name, you act in that entity's name, you operate business as that entity, you sign contracts as that entity, you borrow as that entity, your personal assets are not at risk should something go wrong, should you be sued, should you breach a contract, should you be unable to pay your business's debts. Your creditors or your potential claimants cannot reach your personal assets. So it is from a legal and liability protection perspective, it is a way to essentially put up a shield around your personal assets and keep your business assets and your business liabilities and your business creditors away from personal assets such as personal bank accounts, homes, and other property that you would own in your individual name or with your spouse, perhaps. In addition to liability benefits and protections, there are tax benefits that can apply that you would not otherwise necessarily enjoy unless you had formed your business as an entity. And before I get over to that, I skipped over the caveat, which I see my asterisks here. I want to kind of set at the outset that the personal asset and liability protection applies generally to the acts that an entity does. But if you are providing real estate services, and I'll get into what that means, it essentially means anything that you need a real estate license in Pennsylvania to do. You are not acting in your entity's name. You are acting in your own name or your brokerage's name as a real estate agent. And the qualified association does not necessarily provide you liability protection against your real estate clients or other real estate services that you would be engaging in. So that's an important caveat. I think if you ask me the reason why that is, it's the same reason that lawyers can be held personally liable, accountants can for malpractice, and that is because we're professionals and we're licensed, and we have fiduciary and other duties to our clients, and they put a lot of trust in us personally. So the law does not always provide legal protection for people in the professional context. That is why we all carry liability and malpractice insurance. So that's an important distinction. I do want to mention, I'll get into this in further slides, but apart from those real estate services that your LLC or your entity may provide, there are other things you can do with that LLC. You can rent a property, you can enter into an agreement with somebody, you can engage in pretty much anything else an entity in Pennsylvania can do. And as long as you're not providing real estate agent services with those entities, you would enjoy the same liability protection that any other entity would. So, you know, it's important to mention that up front just because I don't want to create the impression that forming an LLC is a shield against all potential claimants that a real estate agent may have. So as far as the tax benefits, I'll skip that portion and leave that to Barb. The final thing I wanted to mention about one of the benefits of incorporating is, you know, real estate agents act in teams. They often have succession planning that they undergo, whether it's maybe a son or daughter getting into the business, or a relative, or somebody you've brought along. There are ways that you can transition your business as a real estate agent the same way any other family business or other type of business would, in terms of succession planning and bringing people on. There are also, by giving them ownership percentages is what I mean by that, and transferring your ownership percentages to other people. There are also incentive compensation arrangements you can make with one of your team member by giving them a piece of your entity and giving them an ownership percentage, and providing them with some ownership in the entity, even if you're still a majority owner. So that would be another benefit as well. So one of the questions I get a lot when I'm sitting down with any type of client who's looking to incorporate is, what type of entity should I form with you? So two things I want to point out. Number one, 99% of the time, I'm going to steer you towards an LLC. I do that because, especially if you're a single member LLC, it's easy to form. It's probably the least expensive entity to form in Pennsylvania. It has the least corporate governance continuing requirements of any entity. And it is very commonplace for people, you know, entrepreneurs starting out or businesses starting out to select an LLC. So all of the qualified associations I've registered have been LLCs, and most of the entities I've formed today are LLCs. There was a certain point in Pennsylvania where you might have heard a lot of real estate being held in a limited partnership. That's still very common just because that was done for so many years. The reason for that was something called the capital stock franchise tax, which was abolished a few years ago, and that no longer applies. So an LLC holding real estate isn't taxed any more than a limited partnership would, all other things being equal. So something you might see is a lot of limited partnerships holding real estate, although today an LLC can do the same thing from that perspective. This is a thick slide. The only other thing I want to point out, there's a lot of information on here. The only other thing I want to mention to you is that if you are not incorporated, you are on the left side of this table. You are a sole proprietorship, and you enjoy none of the liability protections that an entity would have for its owners, as well as none of the tax benefits that an entity would enjoy if it elect S-Corp status. And that will lead me into my friend Barb here to talk about the tax benefits of forming an entity and some of the ways that entities can enjoy paying less taxes, which is always a good thing. So Barb?
Thanks, Dan. So one of the things I wanted to touch on, this does say a S-Corp or an LLC taxed as an S-Corporation. I do get that question a lot. If you are an LLC already, you are still going to be an LLC. You still have that limited liability protection that Dan was talking about. You're just asking the IRS and the state to tax you as an S corporation. So there's two ways to become an S corporation. Dan was talking about being a single member LLC. And if you're an LLC already, even if you're a single member, you would file Form 2553 to request for S corporation status. If you're a sole proprietor, you would either have to form an LLC or incorporate and then request S corporation at that point. So I just wanted to clarify that because I do get that question a lot, is if I'm an S corporation now, how does that affect my LLC status? So when you are taxed, as Dan mentioned, there's different levels on that previous slide: sole proprietorship, general partnership, limited partnership, LLC, S corporation, and so forth. When you're taxed as a single member LLC, you are taxed in the same manner as if you were a sole proprietor. So whether you're a one-person LLC or a multi-member LLC, you would either file sole proprietor or a partnership tax return, which rolls into your tax return with self-employment earnings. As an S corporation, the profits, the bottom line profits in that S corp are not taxed at the self-employment level. And that's typically about 30%. You're paying the employer and the, 15%, and you're paying the employee and the employer level taxes. So the S corp election allows you to be taxed as an S corporation, which is not subject to those self-employment taxes. So that typically saves you about 15% on your bottom line profit, whereas usually you would see that, you know, on page 2 of your 1040, that huge self-employment tax on there. The other thing that the S Corp saves you, now this is in the state of Pennsylvania, I'm not familiar with other states because PA is such a great state that has so many local taxing authorities that we love to pay taxes to. You are not taxed with your S corporation at the local level either. You would as a sole proprietor, you would as a single member LLC that is not an S Corp, and you would at your partnership level as well if it's ordinary income. So one of the huge savings about being an S corporation is saving on that self-employment tax. Like I said, now the IRS would not allow you to circumvent 100% of self-employment tax because that would be a little bit crazy, right? So actually that's probably on our next slide that we could, yeah, I can just talk about that. So you are required to pay yourself what the IRS calls reasonable compensation. And what that means is sort of the guidance that the IRS gives is not very clear. So you have some leeway to make that determination. It would be based on a couple of things. Well, what is your bottom line profit? If your bottom line profit is 0 or maybe even up to 40,000 and you're required to pay yourself, maybe it doesn't make sense to be an S corporation. It doesn't always make sense to be an S corporation for everybody, but if you have a profit, a bottom line profit of, you know, maybe 40, 50 or more, then you might want to think about being an S corporation. You would have to pay yourself wages, so that would be determined. You would want to talk with your accountant. We generally use like a 60-40 rule, and that means we would want you to pay yourself about 40% maybe of that bottom line profit as a wage, because remember, as a wage, you're paying self-employment tax and local tax on that. So the savings would be about the 60% part of it that we would suggest taking distributions as owner draws that you would be used to doing if you were a sole proprietor or a typical LLC. And those are not taxed. So you're taxed on that bottom line profit, but it's your ordinary income rate. So you're not taxed with that extra 15%. And in Pennsylvania, you're not taxed with that extra 1%. There's a little bit of a calculation here, it looks like, that Dan put together. So that is one of the examples. As a sole proprietor, you could potentially pay, you know, up to $15,000 on that same $100,000 profit. And if you were to take a $40,000 salary and a $60,000 distribution to yourself, or an owner draw, it's called as well, then your taxes would be maybe $6,100 on that versus the 15, and have about an $8,500 savings on that. So that's the main savings for taxes for the S corporation. And I would encourage you to talk with your accountant if you're interested in learning more about that. You can certainly contact Gift CPAs. We'd be happy to help you through that process as well. And as Dan is working with you, he could also fill you in more about that and would recommend some savings for you as well. Did I skip something on that first slide, Dan? Oh, yes, I did. Very important. So not necessarily related to just S corporations, but the Tax Cuts and Jobs Act offered a new deduction called a Section 199A deduction. And what that means essentially, it doesn't exactly wash out this way, but the gist of it is whatever your bottom line profit is in your business, whether you're a sole proprietor, an LLC, as a partnership, or an S corporation, if you are not a specified service business, you can still be a specified service business. And again, I would encourage you to talk with your accountant to learn more about that. For real estate agents, you're not, though. They specifically excluded that as specified service. So you pay taxes on 80% of your bottom line profit, essentially, as how it works out. So let's say you had a profit of 100,000, 20,000 would be a deduction for you against your taxes, and you're essentially paying taxes on $80,000 instead of 100,000. So that's what that Tax Cuts and Jobs Act came out with, that Section 199A. It's definitely a great credit for you. So if you're not aware of it, you should really be talking with your CPA about it if they haven't brought it up to you. And Dan, I think that's all I have.
Okay, yeah, and as Barb mentioned, when I'm talking to real estate agents about forming an entity, or talking to any business owner that maybe isn't necessarily an entrepreneur or a startup, but has been operating themselves as sole proprietorship for some time, they probably have a pretty decent idea of what their revenue stream is going to look like from year to year, what their expenses will be. They're probably running a budget, and so they probably have at least a rough estimate of what their net income will be for a year. So in those situations, as Barb mentioned, you know, an S-Corp is an S-Corp election is a really powerful way to save yourself a huge chunk of taxes on a year-to-year basis. And the way I like to think of it is that, you know, as a sole proprietor, you're just paying yourself as an owner, and everything is taxed that way. When you elect an S-Corp status, you're making yourself an owner and an employee of your entity, and you're paying yourself a salary, as that's your employee portion, and then your ownership portion is the distributions, and you enjoy tax benefits by setting it up that way. As Barb mentioned, there are rules that the IRS has, because you can see how if people got a little too aggressive, they might run afoul of how this is intended to be set up. So the rules that Barb mentioned would keep you in line with paying yourself a reasonable compensation. If you tried to pay yourself $1,000 and then took $99,000 as distributions, that might raise a red flag, because that wouldn't be considered a reasonable salary for somebody in your line of work. But it's, you know, it's one of the ways that by incorporating year one, you can experience savings that, you know, will probably, you know, at least 5-10-fold dwarf the cost of setting up your entity in the first place. So whatever you put into it on the front end, you're going to be likely to enjoy if you structure it in this way, right from year one.
Dan, could I add one more thing that I forgot to add that I think is very important?
Sure.
So along with the caveat of having to pay yourself some payroll so that you're not circumventing 100% of Social Security taxes, there is another caveat that you need to be aware of that's different than a partnership, or if you were, well, a partnership. if you're an S corporation with more than one owner and you want to take those distributions at 60% of your profit, you have to keep in mind that the rules of the S corporation do not allow you to make uneven distributions. So you would take distributions according to your ownership. If one owner is 75, another owner is 25%, you want to take out $100,000 in distributions, the 75% owner would get 75,000, the 25% owner would get 25,000. So the other considerations that you might want to think about if you're not a 50-50 is, well, maybe one person gets more salary than the other person because they are allowed to take larger draws. So that's kind of the things that we talk about with our clients as we walk them through this process as well. Thanks, Dan. I forgot about that part.
Sure, yeah, and that certainly comes into play, as Barb mentioned, if you're a multi-owner structure. Obviously, if you're a single member or a single shareholder, you're taking 100% because you own 100%. There's nobody else to pay as an owner. But certainly, when you are an S-Corp, you need to follow those percentages when it comes to distributing. Paul, since before we move into the qualified association slides, I thought it might be a good time to ask if there were any initial questions on the formation or tax items that we should cover, or just keep going?
Just keep going. If anybody does have no questions that popped up either in the comments or the Q&A session, but those windows are open. So if you have any, and I don't mind being rude and interrupting people, so just go ahead and ask them, and I will stick my nose in, and we'll get those questions answered right away.
Yeah, it's as a lawyer, I'm used to being interrupted, so no worries there. So you're a real estate agent. You've come to me to form an entity, and now you say, so I want to use this entity to receive commissions from my broker. That's why we're here today, to talk about qualified associations. I'm a real estate agent. I've been operating as a sole proprietor. I'd like to form the entity to enjoy some of the benefits we've covered. And my chief income stream here is going to be the commissions that I get from my broker and from selling homes for my clients, buying and selling homes for my clients. So what do? In Pennsylvania, you take your entity and you form a qualified association. This is a relatively new creature in Pennsylvania real estate law. It was introduced for the first time as part of the 2009 Act amendments. So, as I mentioned, I've been giving this presentation for about 3 years now, and have seen a lot of uptick in interest among agents looking to do this. And I've worked with a lot of people in going through this process, and Barb has as well. I work a lot with Barb and her firm, and we've done a number of these together. So I like to think we work pretty seamlessly, and can give you the legal and tax advice that you need. So if you come to me, I can take your entity and I can register it as a qualified association. There are rules that apply to that qualified association. The first is that the entity itself is not the license holder. Your license remains in your name, or your brokerage license remains in the brokerage name. It can only be owned by licensees, agents who are all affiliated with the same broker. So you can form this as a single member. I'll just keep referring to single member LLC again, because that's what the entity I form for a lot of these agents. But again, you could be a corporation if you wanted to. You can only have one licensee. If you have more than one member, if one of the licensee leaves the brokerage, he or she must be bought out. And in any operating agreement with more than one member, you would see buy-sell provisions and restrictions on transfer that say, okay, I'm leaving my brokerage, or I want to get out of the business. here's what I do with my ownership percentage, and here's how I'm paid for it. So we talked earlier about ownership percentages and profit distributions. Again, if you're an S-Corp, you have to follow, if you own 50, you take 50 as distributions. If you own 100, you take 100. If you own 95, you take 95, and the other person takes 5. If you're not an S-Corp, those rules do not apply. So I just want to point that out. I think in most instances, we would probably steer you towards electing S-Corp status because of the tax benefits that you would enjoy. But that is, I don't want to say a downside, but just a rule that you need to keep in place when you do form an S-Corp. If you're 95-5 with your other member, you need to pay your distributions out that way. If you don't, again, red flag to the IRS, could get you into some issues that Barb would want you to avoid. And I would want you to avoid too. There's no prohibition against a licensee owning multiple qualified associations. So perhaps you have one on your own, perhaps you have one as part of a team. So there's no prohibition against multiple qualified associations with the same owner or owners. Again, they are owned by the agents themselves, not the brokerage. So they are, when I would form an LLC for you, I would list you as the member, or you and your other owners as the members. Where does the income stream come from? As I mentioned, your commissions are paid into the qualified association. So that's your revenue stream. That's how you generate a profit. Your expenses can be paid with that entity, and that's, running those two together, that's how you get your net income. And from that net income, you pay yourself your ownership distributions and your salary. If we're just starting out forming an entity, as soon as I get confirmation from the state that your entity is formed, I'll do two things. I'll send you an operating agreement, and I'll begin your qualified association application. As I said, I've done a number of these. It's all done online lately. It's on the PALS system that Pennsylvania has, PALS, and it's where you log on to renew your license. And on there's a link to file an application. I usually just ask my clients to give me their username and password. You can change it afterwards if you don't want me having that. But as I said, I've done a number of these, and I just go on and file the application for you. And you will be notified when that's done. I do have some good news. I just formed one earlier this month, actually with a client that Gift referred to me. And a couple of years ago when I was starting out forming these, I would sometimes see a month go by before we got confirmation that the qualified association had been registered. The most recent one I formed took 3 hours. By the time I submitted the application about 12 o'clock, got an email from the client saying they got a letter from the state showing they're registered about 3 or 4 in the afternoon. So they have sped things up. I was not expecting that, given the quarantine and the everything that's going on up in Harrisburg. Unfortunately, forming LLCs are not nearly as quick. We're still seeing, I had been seeing in the thick of things in April and May, that take up to 3 weeks. The latest one I formed this week took about a week. If you need it done tomorrow, you can pay the state an extra $100, $200 and have it done same day filing if it's an urgent risk. So just thought I often get asked, how long will this take? You're dealing with Harrisburg, so there's some give and take there as far as how quick they're processing things and how many people are in the office. But my most recent example was pretty quick. So again, let's do that. We register the qualified association within 30 days. And my next slide is going to get into some of the do's and don'ts of once you have a qualified association, what you can and cannot do. Touched a little bit on this above. The number one rule is that you can't provide real estate services in the LLC's name. So anything you need your real estate license to do as a real estate agent, you will be doing in your own name or your brokerage's name, and you will be keeping the LLC or the entity essentially invisible to the client. If we form, Dan Desmond Capital LLC, and we elect qualified association status, I'll still be putting myself out to the general public and my real estate clients as Dan Desmond, agent Keller Williams, and that's how I will advertise. I will not advertise in my LLC's name, because then I would be doing real estate services in the LLC's name, which is what you want to avoid. So again, the LLC itself does not hold a license. The members or owners do, and it cannot provide real estate services. So when you heard me talk at the beginning about real estate services and the caveat to the liability protection, this is where this comes into play. If you're an LLC or qualified association, that entity is not providing the real estate services. You as the owner are, or your brokerages. You can't go to your buddy at Remax or Coldwell Banker and form an entity owned by the same two. I'm not sure why you would want to, or if that happens, but they all need to be owned by owners from the same and agents from the same brokerage. And again, if you switch brokerages, that's a point where your operating agreement should have some provision in there saying what happens at that point, because you can no longer be an owner of that entity. So one of the other restrictions is that because these are entities set up to receive real estate commissions, and because you need a license to do that, the owners of the LLCs all need to be licensed real estate agents. And one of the questions I'll get when I'm preparing operating agreements and I prepare provisions to cover this is, so what happens if something happens to me? What happens to my shares? The Act builds in an 18-month window for affairs to be wrapped up and ownership percentages to be transferred to somebody else who is a licensed agent, or perhaps for your entity to just be dissolved. In the meantime, your personal representative or state administrator can act as the owner, so to speak. At that point, obviously, they're not going to be conducting real estate activities. It's going to be more in a winding up capacity. But just something important to know, let's make sure in our operating agreement it states what happens should you pass on. As any operating agreement will do, this is something you need to cover because of this. And again, I draw the analogy to other professional entities. A law firm would have the same type of provision in there, where somebody with an interest in a law firm that's registered as a professional entity with the state cannot be owned by somebody who is a non-lawyer. Same thing with accountants, architects, doctors, dentists, etc. Your LLC can't engage in any prohibited act under RELRA. You can't use it to get around anything that you can't do as an agent or your brokerage can't do. That's pretty common sense. It wouldn't be the one holding your escrow deposits. Again, you can see why you want to keep those lines separate. It's probably actually better for you that you're not holding escrow deposits in your LLC's name. And then, the final thing I want to kind of talk about as far as what are the do's and don'ts is what we're going to name the entity. So it shouldn't have anything with the term real estate in it or real property. So, most of the entity names end up being fairly generic. I used the example earlier, Dan Desmond Capital or Desmond Capital, something to that, Desmond Holdings, LLC. But it can't be Desmond Real Estate or Dan Desmond Real Estate. A lot of people ask me, can I call it the Dan Desmond team? You can. That doesn't necessarily connote real estate when you hear that. But I try to tell my clients not to do that, because that's probably how I'm going to be advertising myself to the public. If I do have a team, I'm going to be putting that on my sign or putting that on my business cards. And then all of a sudden I have Dan Desmond Team LLC and I have Dan Desmond Team. One can't provide the real estate services, but I'm using the same name essentially with just that LLC suffix on the end. So I try to steer you away from using any name that would be similar to how you're advertising yourself to the public for that reason. Again, just to kind of keep those worlds separate. You know, every qualified association I've formed has been a Pennsylvania entity. I know we have some colleagues from outside of Pennsylvania. You can take a Delaware LLC or Maryland or New York and elect qualified association status in Pennsylvania. The act does permit that. So Paul, this is the end of my qualified association slide. Again, I thought it might pause, see if there's anything you'd like me to run through or just keep going along here.
Well, got a question, and I'm guessing this is for Barb, but throw it out there for discussion. If my net income is $100,000 in 1 year and I pay myself a salary of $50,000 for that year, how is that going to affect me in case I apply for a loan or a mortgage? Will I be showing my income as $50,000 or as $100,000 on my tax return?
Sure, I can take this question, Dan. So that's a good question. So for when you go to apply for a loan, the banks typically will ask for your income that's all encompassing. So they'll want a copy of your business return. They'll want a copy of your personal tax return. What happens when you're an S corporation is you get a piece of paper basically off of that return that's called a K-1 that shows the income of $50,000 that will flow to your personal tax return. So that will show your business income on your personal tax return is $50,000. Then your W-2 wages will also show as $50,000 of W-2 wages on your tax return. So essentially your personal return will show that you made $100,000 in that given year. And typically you want to make sure your bank understands this, whoever you're working with. The banks that we work with, that's how they do it. So I would think that most banks do it that way, but you just want to be in communication with your bank as well, just to make sure they understand why your profits maybe dropped $50,000 from 1 year to the next. And it's really just because you paid yourself. It's not a true drop in profit. Typically the banks will take your bottom line profit and add back officer wages. They add back amortization, they add back depreciation, they add back interest expense in some cases. Those are kind of a non-cash items, they consider them. So that's what your true profit would be at the bank anyway. I hope that answers the question for you.
Got a thumbs up and a thanks. So must be good.
Great. Yeah, that's a good question. You know, you've sat through these 45 minutes and maybe I've sold you on forming an LLC, forming an entity in Pennsylvania and electing qualified association status. What's the next step here? So shoot me an email. I'll send you a checklist that I have and you can either fill that out for me or we can schedule a call to go over at the same time. I have a few questions that I need to go through with you, get things like your name, your address. I do need your social security number so we can get an EIN for your entity. We need the name of the LLC, go over a few other basic questions for you. If you're coming to me and you're forming a single member LLC, it's a pretty streamlined process in Pennsylvania. And our firm does a lot of them. Barb works with a lot of clients like that. So after I have my initial consultation with you and steer you to Barb, what I will say is that, you know, if you're going to elect an S-Corp status, I will always recommend that you speak with an accountant. I'm not an accountant. I do not engage in that practice. And I'm not here to tell you what a reasonable compensation for a real estate agent should be. And that's where I would recommend you speaking to Barb to go over what that be. But she works with a lot of clients like you and should have an idea about what you can pay yourself as a salary and the remaining you can take as distributions. So after our call, we'll form your entity, we'll prepare your operating agreement, we'll get you an EIN. Why do we get an EIN? Because you need to set up a separate bank account now that you have an entity. Don't use your personal checking account. If there's anything that can run afoul and get you in trouble as far as keeping your personal assets protected, it's called commingling funds between your business and personal assets. And if you don't keep that line clear and you don't set up a separate bank account and transact in the business's name and pay the business through that account, then you're getting into the situation where, okay, is this just a shell company? And you know, is this entity really any different from its owner? And that's where you can get yourself in trouble as far as personal liability protection. Very rarely, if ever, happens, because that's kind of the number one rule for how to maintain a separate entity from your personal assets, but something to be aware of, and that's why we'll get you an EIN so you can set up a separate bank account.
Dan, may I add something to that?
Sure.
So I do see a lot of this where single member LLCs are used to operating as a sole proprietor, so they just continue their bank account under their sole proprietor. I can tell you under audit, if the IRS agent, the Pennsylvania agent, whoever might be auditing, sees other deposits in your personal account that you're using as your business deposit account as well, they're going to question whether or not that's income and why is that not income that's being reported on your tax return. So it's always a good business practice to keep that separate, as Dan suggested. You really don't want to commingle the funds, but it's also a clean slate for you. You have a bank statement that shows your true business income and expenses that you can sort of quickly determine your profit for the month by looking at that. And the other thing I wanted to add is you will need that EIN number, the SS4 that Dan would file for you. You're going to need that EIN number and that form that's called an SS-4 that you receive from the IRS once you apply for the EIN to take to the bank. They require that form to open up a new bank account under the newly formed entity. And the last thing I just wanted to add, Dan, is we always recommend to have an attorney file the operating agreement, the LLC election, or the LLC domestic with the state of Pennsylvania. And really that's because we've seen too many that were done incorrectly, because a neighbor could help because they're so intelligent and they could help us with that. Or I have a buddy that knows a lot about it, or I'm going to go to LegalZoom. Well, none of those really know what your ultimate goal is and how you're really being formed. That's sort of a flat, this is a typical LLC. So we always recommend going to an attorney, having all those documents prepared by the attorney. It's worth paying the money for it. It's really not that expensive, and you know it's done right. With the operating agreements, you typically do not see, especially if you're using like a LegalZoom, you will not get a single member LLC operating agreement because you're a single member. So why do I need an operating agreement with myself? So we have seen with these PPP loans that have come out, and when you apply for a bank account under this new entity, that you need an operating agreement. So if someone's telling you that you don't need that, you really, that's one of your documents that really should be in your back pocket for your company, you know, that you want to save for your business documents.
Yeah,
thanks.
And that's a great point, Barb. And we do that all as a package. Again, if you're coming to me to form an LLC, I'm going to do all those for you, and I'll quote you a rate that encompasses all of that. Gift can file the S-Corp election if you decide to go that route, or they can ask Barley to do it. Again, the careful thing there is that you do want to, you know, your attorney can file your S-Corp election, but they're not going to tell you what a reasonable compensation is. I'm going to steer you towards Barb for that to get advice on what you should be paying yourself as a salary.
Dan, I got a question on going back to liability. I know, so if, as an agent, if I mess up at doing real estate services, my LLC protects my personal income or protects my personal assets. If I screw up, if I, on a Friday night, I'm out just me, not doing real estate services, and I hit somebody in a crosswalk, do the assets of the business become liable since I own the LLC, or are they two completely separate things that never ever, can one become the target or an asset of the other?
No, unless the legal term for that is nexus, unless there's a nexus of the act that you did that involves your LLC somehow, you're not going to be a suitable defendant in that lawsuit. Your LLC wouldn't be a suitable defendant. So if it's a purely personal act, you're not acting in your LLC's name, or it's not related to your LLC, they really can't reach your LLC's assets.
So that liability is a two-way street, or that liability protection is a two-way street.
Yeah, and that's a great point, Paul. Yeah, if you're, have revenue entering your LLC, that creditors of your LLC can't reach your personal assets, and then creditors of you personally can't necessarily reach your LLC.
Thank you.
Yep. So as I mentioned before, once we form your entity, I'll file an application for you. And that's a pretty straightforward application. And again, it's all done online, providing some basic information. Lately, they've just been requiring me to upload the operating agreement to prove that you're an owner. So I'll do that. I'll upload your certificate from the state and the operating agreement. And it's done in that same portal that you renew your license in. And that should be done within 30 days of formation. There used to be a paper application when I started doing this. Again, now it's all done online. But rather than showing you 50 screenshots, I took some screenshots of the old application to show you what it looks like as far as what I'll be filling out online for you. So if you have any further questions, you want to dive into this a little bit more and educate yourself about it, you can feel free to ask Barb or I. We'd love to talk to you about you and consult with you if you're interested in going further. There are also two helpful resources. The first is the Act. Y'all probably got a copy of that from your broker. It's probably sitting on your desk somewhere. What you might not have seen is the frequently asked questions document that the PA Association of Realtors has put out. This is a really great document and something I consult with and review on a regular basis when I'm getting questions. So that's a good good resource to look at as well. Don't expect you to write all this down right now, but I do believe, Paul, I'll send you a copy of the latest version of the presentation that I showed today. If you'd be more than welcome to share that with anybody. And if you do have questions, our contact information is included here in the slide. Went over a lot today, spoke at a high level about a number of topics. Obviously, none of this is, specific to your particular circumstances. You might have issues that arise that you need to speak with Barbara about that are unique. But for a lot of these entities, it is a streamlined process. We can do it quickly, we can do it efficiently, and both Barb and I work with a lot of startups, entrepreneurs and business owners. We love helping people out, whether they're just getting started or they've been doing this 20 years and they say, there's a more efficient way for me to do this. And Dan and Barb, I'd like to engage you to do that. So please feel free to reach out to any of us at your leisure. And I'll just close by saying I'm glad that, when we first started talking about this presentation, some of you, I think real estate agents were still being kept on the sidelines by the state. I'm glad that those restrictions were lifted, and I'm glad to see real estate activity coming back roaring, especially in this market. And I hope all of you are staying busy and are having, despite the couple of months interruption, having a good summer and a good resumption to your business year. So with that, I'll just open it up to questions, Paul, if we have any.
Nothing. Again, if anybody has any questions, now's a good shot, good chance, or now's your opportunity. Put them in the chat or in the Q&A. Dan and Barb, both of you, I really, really appreciate your time. one of these days, if we ever get back to it, I'd love you guys to do this presentation live. So much more interesting to see the interaction. This is good, but it's so much better live. I saw it a while back in Harrisburg, and this is the only way I could think to get it to Lancaster.
Yeah.
This, you know, with everything else that's going
Happy
on.
to do that as soon as we can do that. And thank you to you and Deanna for setting this up.
Yep, I
it's
agree. Thank
mostly
you.
Deanna's idea. I just ran into her at a chamber event and said, "Hey, I saw this presentation a while back," and she said, "Yeah, that was us." So I appreciate her help in organizing this as well. So again, any last call for questions? Nothing's popping up. If you guys do have any questions, it's probably best to talk to Dan or Barb directly. The only role I play in this is answering questions, and it's my Zoom account. But so Deanna, this is being recorded, so I'll get you a copy of that. And if anybody else wants a copy of the recording, I don't think there's going to be any problems doing that. So my email, I'm sorry?
Okay by me.
There's my email, so just reach out to me. And I'll send you the recording by something big that handles large files. So Dan and Barb, again, I thank you, and have a good day. Try not to get wet. I think it's going to be wet all for the next week. So stay dry, stay warm, and stay safe.
Thanks, Paul. Thanks, everybody.
Thank you. Thanks, Dan, Paul,
Take care.
Deanna.
Thank you.